Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com, and there you could also sign up for some free reports that we offer that get delivered to your inbox directly. Crude oil prices generally fluctuate based on supply and demand metrics. If you were in a recession or facing a pandemic, demand for oil shrinks, as does the price per barrel. But that's not the case right now. World oil hit a record in June, and August could see another peak. Moreover, analysts believe oil price could hit $100 to $120 per barrel in the fourth quarter of this year. And that's good news for today's income stock. Enbridge Inc. traded on New York Stock Exchange under symbol ENB. Now, as oil and gas midstream company, the rising oil price won't initially help energize Enbridge bottom line. That's because upstream companies sign fee or take or pay contracts to use Enbridge infrastructure. That said, sustained higher oil prices can result in midstream companies increasing their fees. And investor optimism is always good for a company's share price. John?
Yeah, and things are looking up for Enbridge right now for a couple of reasons. First, global oil demand hit a record 103 million barrels per day in June, with the international energy industry predicting oil demand could hit a new record in August of up to 103.6 million barrels per day. And in 2024, oil consumption is expected to remain near record levels at around 1 million barrels per day. And second, most investors haven't heard of Enbridge, even though it has a market cap of 70 billion and pipelines across North America, mainly because the company's located in Alberta, Canada. What many investors may not know is that Canada is home to the world's third largest oil reserve, behind only Saudi Arabia and Venezuela.
For the interest's sake here, our viewers may want to know that Canada has 168 billion barrels of proven oil reserves, of which 164 billion barrels are in form of oil sands, which are located in the western province of Alberta and Saskatchewan. For context, the US has 44 billion barrels of proven oil reserves.
Yeah, and when it comes to Enbridge, it's a good idea to understand what's happening in Canada's oil industry, and right now it's booming. Canada's oil industry is set to increase its total production by nearly 8% over the next 2 years, buoyed in large part by new oil sands projects. In 2023, Canada's oil production is set to surpass 5 million barrels of oil per day for the first time ever.
And that oil and gas needs to be shipped through pipelines, and that's where Enbridge comes in.
Exactly. Enbridge is a massive midstream company. You may not have heard of it, but chances are it impacts your daily life on some level. It operates the world's longest and most complex crude oil and liquids transportation system, with approximately 17,800 miles of active pipeline across North America. This includes roughly 9,300 miles of active pipelines in the US. In 2022, it delivered a record 4.3 billion barrels of oil with this is important, safety delivery record of 99.99%. Now, Enbridge more broadly transports around 30% of the crude oil produced in North America. It transports about 65% of US-bound Canadian exports, and it accounts for 40% of total US crude oil imports. Enbridge is the largest single conduit of oil into the US. It moves about 85 separate commodities, including more than 10 types of refined products. In addition to crude oil, Enbridge's natural gas pipelines connect North America's most prolific natural gas supply basins to the continent's largest demand centers. This includes New York City, Chicago, Boston, Toronto, and Seattle, and to liquefied natural gas and Mexico export markets as well. Now, Enbridge's natural gas network moves about 20% of all gas consumed in the US. It's the largest natural gas supplier to New England, the Southeast, and virtually all of Florida. Its gas transmission and midstream pipelines cover about 73,800 miles in 30 US states, 5 Canadian provinces, and offshore in the Gulf of Mexico. Enbridge's natural gas transmission and midstream operations include the transportation of about 25.7 billion cubic feet per day of natural gas, and 196.8 billion cubic feet of net working storage.
Now, John, let's talk about numbers here. How has Enbridge been performing lately?
Really well. For starters, as a Canadian company, of note to anyone watching, Enbridge reports in Canadian dollars. And as of this recording, $1 Canadian dollar equals 75 cents US. And that's important to know when you're hearing about their financials. In the second quarter, net income jumped a whopping 260% year over year to 1.8 billion or 91 cents per share. Adjusted earnings were mostly flat at 1.4 billion or 68 cents per share, and that's compared to 1.4 billion or 67 cents per share in the same period last year. Cash provided by operating activities grew 36% to 3.4 billion. Distributable cash flow inched up 1% to 2.8 billion. Now, management noted that the company's four businesses delivered another solid quarter of financial performance, and the company is on track to achieve its full year EBITDA and distributable cash flow per share guidance. This includes 4 to 6% EBITDA growth per year through 2025 and approximately 5% thereafter.
Now, Enbridge is actually very well known for its high yield dividend.
Yeah, Enbridge is known throughout the industry for its reliable, growing high yield dividend. It's paid a dividend for over 68 years. Over the past 28 years, its dividend has expanded at a compound annual growth rate of 10%. In December 2022, it announced a 3.2% increase to its dividend, which increased the quarterly payout to 88.75 cents. That's Canadian. This translates into $3.55 dividend per share on an annual basis for 2023. And it has maintained, of course, its payout since then this year. Now, keep in mind, Enbridge's dividend is declared and paid in Canadian dollars. As a result, the quarterly payout for U.S. investors will fluctuate based on the exchange rate at the time. It currently pays a quarterly dividend of around 66 US per share or $2.63 on an annual basis for a yield of 7.65%. Now, if you look at the company's US chart, it looks like the dividend fluctuates. That ebb and flow is actually a result of the exchange rate. As noted, the company has raised its annual dividend for 28 years. So if you actually looked at the Canadian chart, the dividend looks like it would be going up like gradually in steps.
Let me ask this. Could this company sustain that frothy dividend it pays?
Equally important, of course, is the ability to continue to pay a big dividend. But thanks to its financial strength, its dividend payout is expected to remain within its target dividend payout ratio of between 60% to 70% of distributable cash flow. Now, this allows the company to return income to shareholders and retain some income for new growth opportunities.
And finally, let's talk about ENB share prices.
Enbridge's dividend has grown at a reliable clip, but its share price has taken a breather since ripping significantly higher in 2021 and the opening months of 2022. As of this recording, Enbridge Inc. stock is near its 52-week low. It's down 6.4% year to date and around 11.5% year over year. Despite being in the red in 2023, Wall Street analysts see better days ahead for Enbridge. Over the next 12 months, even conservative Wall Street analysts have provided a median target of, this is US dollars, $41.06 and a high estimate of $44.09 per share.
John, thank you so much for your analysis. Just to recap, Enbridge is one of the biggest midstream energy stocks, moving 30% of crude oil produced in North America, transporting nearly 20% of natural gas consumed in the US, and it operates North America's third largest natural gas utility by consumer count. Some parts of the world are trending towards renewable energy, but the fact of the matter is natural gas and oil will remain critical component of our energy supply across a paced energy transition. Enbridge's asset network is large, diverse, and unmatched, providing conventional energy infrastructure and lower carbon opportunities, supporting dividend growth and long-term shareholder return. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.